What is going on YouTube? It's Sankey and we're back with another one. So before we get cracking, let's take a quick check on the portfolio and see what is going on. So as you can see, the portfolio remains largely unaffected through today's volatility. That is what happens, guys, when you have a well-diversified portfolio. That's why I come on here each and every day to present you guys plays in different industries. You guys know we've got clean energy, we've got EV, we've got cloud, various other industries all nailed down in our portfolios. With that being said, in this video, I'm coming at you with a couple of stocks that I'm not selling out of, and I don't think you should either. I think they've got big potential. You just have to have the right strategy and a bit of patience, and they're going to do well for your portfolios this year. Now guys, before I get cracking, I'm going to need you to hit that like button for me, and if you're new, hit the subscribe button, join the family, because you know what we're about on this channel. That's clear information with precise guidance. And also guys, I've got my session on catching a runner where I'm going to give you guys some insights that you can apply to try and catch those stocks before they run up. So stick with your boy through this one. Now let's jump into the first play. First up is NIO. Now I know a lot of you probably wondering what has been going on with NIO, because I've received that very question on the Discord over at the Patreon after we've seen NIO run up past $60 after NIO Day to come back down into the 50s. Guys, it looks like NIO is showing early signs of consolidation, and it looks like history is repeating itself, and if that is the case, then we know full well how to crush this play. Let me show you. So we know at the end of last November that NIO stock price came down from $50 to start trading in the 40s, and it's trading sideways for about a month's time. Now we call that consolidation before the next catalyst came in. That was the December delivery numbers that pushed that stock above 50. Then NIO Day came in and that pushed that stock above 60. Now it's come back down to $50. But we made the most of that sideways trading movement by investing when NIO was consolidating. And then we enjoyed the returns that we got when NIO's catalyst came in and pushed it up to $50, $60. And now it looks like NIO is showing early signs of consolidating in the high 50s. That's why I say history looks like it's repeating itself. So as you can see, pretty much sideways action this week in that NIO stock price. And we're going to make the most of it by investing when it's consolidating this time around before the next catalyst comes in and pushes that stock comfortably above $60. So those locked into the channel will know that I have my end of 2021 NIO price target set at $100. And if you break it down, it looks like NIO is on track to hit that. NIO started this year around $50. All it takes, guys, is a $5 increase each month, and NIO's going to hit that $100 mark, and that marks significant upside on the current stock price. So like I said, all we need is $5. NIO's currently standing at $58. So for me, they've booked in that $5 increase for January. We just need to see another $5 increase in February to push them past that $60 mark. So guys, now let's talk about catalysts to push that NIO stock price up. Now I do think the next potential catalyst is going to be their January deliveries, and that should come in around 10 days time. Now I do think NIO is going to have to hit between 5 to 10% above what they delivered in December for that to act as a catalyst to push that share price up to 60 and sustain that share price comfortably in the $60 mark. Now, you guys know I set my strike price on this play under $56. So while it's consolidating, if you catch that NIO stock price under $56, do consider loading up on this one before we head over into the $60 range. Alright guys, up on screen is Tesla. This is the next stock that I don't want you guys selling out of, because I do think they've got big potential this year. Now it looks like that Tesla stock price is starting to mirror what is going on with NIO, and the same strategy applies with this one. So as you can see, this stock looks like it's consolidating around the 850 mark. Now remember, this is very early signs of consolidation to be confirmed. Now if we just extend the chart, we know that Tesla was consolidating around the mid 400s back in September, October time, which gave us a lot of time, and I said it multiple times, load up on this play right before there's the next catalyst that comes in and pushes that share price up, and that was the inclusion to the S&P 500. So it looks like early signs of consolidation around the 850 mark for Tesla. So I want to make sure you guys crush this play just like you're going to do so with NIO. So I want to put something on your radar. An analyst from Oppenheimer has come out and put a price target on Tesla of $1,036. This is a massive price target, and it's good. It's a sign of good things to come. Now this represents an over 20% increase on the current stock price. So if you play this one right, invest in the dips, catch it when it's consolidating. If this is true signs of consolidation, this can do good things for your portfolio going through this year. Now, as I always say, Tesla is a real wealth builder. It's a cornerstone, a real asset to our portfolios. It's going to generate us money this year and for next many years to come until we decide to exit this. Now, as you guys know, Tesla is not just an electric passenger car company. They've got a lot of different arms to their business and a lot of different directions they can take the company. And I do think it might take one of these different arms to propel that company to its $1 trillion status. Remember, they're working on their semi, so any update on that could act as a catalyst for that stock price. There's also the robo-taxi element to the business, their battery development, as well as their potential insurance arm as well. And all of this can act as catalyst to push that stock price up and turn this company into that $1 trillion company. So for now, my strike price with Tesla remains under $750. Want to see how the next couple of days play out so we can confirm that Tesla is consolidating around that 850 mark. Then we can consider loading up at that point. The next stock that I don't want you guys selling out of is DSG. Now, I like the way that stock has been trading over the last couple of days. It's been showing signs of strength that wants to break free of its current trading pattern. Now, given the fact that we haven't received too much news on DSG and is showing these strong signs, this is a good sign of things to come if the business can deliver for us. Now, if you don't know DSG, they have two subsidiaries. Their first subsidiary called Emporium Motors, they import electric vehicles from a couple of Chinese manufacturers and then sell them in America. Their second subsidiary is called Vantage Tag Systems, and this is software that they install on vehicles of fleet operators with a particular focus on the Gulf ranges. Now, Vantage Tag Systems is about a third of the size of Imperium Motors, and we like this business because as a result, they have a full range of electric vehicles from vans to passenger cars to bikes because they import them, they don't manufacture the vehicles themselves. Now, behind the scenes, this business has been doing good things. They've been receiving a lot of pre-orders, millions and millions worth, but also they've been receiving their vehicles ready for distribution. Now, we like this business because they are cheap. This is a cheap stock if management can fulfill the revenue numbers that they've stated. They want to do about 60 million for the whole company as a whole for this year. Now, with a market cap of around 70 million, this makes this a cheap stock with a lot of upside. Now, I want us to crush this stock just like we're going to crush Tesla and NIO together. Now, you guys know my strike price on DSG is under $1. So if you're new to this play, do consider loading up if you catch them under $1. And do remember, this is a penny stock play, so do invest responsibly into this one. You should have a lot more capital, a lot more funds, a lot more of your portfolio in NIO and a Tesla than into DSG. Alright guys, so it's our session on catching a runner where I give you one insight, something to look for to see if you can catch a stock before it runs up. Alright guys, I'm about to put you on some serious game here, so I want you to pay very close attention to this one. Let's jump into some charts. So up on screen we have Bluesphere Corporation, that's ticker symbol BLSP. Now this is an OTC stock that is not on anybody's radar. Now before you ask me, you can't get it on Trading 212, Robinhood or Webull. You have to go to another broker to source this one. And me personally, if I was you, I would not touch this stock. I think the time has come and gone. Let me tell you guys what happened. So as you can see, this stock was trading flat down here. Now Tuesday morning here, I told the patrons before the market opened, jump onto this play, Bluesphere Corporation, ticker symbol BLSP. Guys, this stock then went up 500% on the day at its maximum. Now I want to tell you guys why this stock went up 500% and why I chose Bluesphere Corporation. Bluesphere Corporation, what they do is they turn waste into energy. Bearing in mind this stock went up, that was Tuesday the 19th. Now let's flick over to Gevo. Gevo is one of our plays. Gevo, they turn crops into renewable energy. Tuesday, let's see what happened to Gevo. As you can see, up almost 80% at its height on the day. So this is where I want you guys to pay close attention. On Tuesday morning, I saw Gevo running up in the pre-market. It was on 30, 40, 50% up. So what I then did was I tried to seek a stock, a penny stock, very cheap, that's doing the same thing as Gevo, because often what happens is when one stock runs up in an industry and the other stocks doing the same thing run up with it. Guys, we've seen Plug Power, for example, secure a partnership, that stock runs up, guess what? Fuel Cell runs up also, but nothing's happened to Fuel Cell on the day. So this is what I want you guys to look out for. In the pre-market, you might see a stock running up. See if you can source another stock that's very similar, doing the same thing. There might be a chance that that stock is going to follow suit and run up with it. And then when you do catch these runners that have run up because of another stock, just like Bluesphere Corporation, do make sure you exit that position as soon as you start making some good profits. As you can see, Bluesphere Corporation, they are plummeting back down to earth each and every day. That's why I say if I was you guys, I wouldn't touch this stock because the only reason they ran up was because Gevo ran up. See, if you've been rocking with the channel, you know what time of the day it is. And this question comes from Fitz. Question is, how do we pay tax? They've made 3K on the invest account on Trading 212 and 4K in the ISA. I think ISA's 3, but do we have to pay tax on the invest? Can you make a video about paying tax in the UK? So this is a great question. Let's separate the two, your ISA and your invest account. So within your ISA, you've made 4,000 profit. That's amazing. Salute to you. Now, within your ISA, I'd always recommend invest as much as you can in your ISA, because you have that tax wrapper around it. So you don't pay any tax on that 4,000 that you've made. There are a couple of downsides to your ISA though. The first is that you can only invest 20,000 every year. So once you start investing more than that, you're gonna have to switch over to your invest account. And the second is that there's a limited amount of stocks available on your ISA account. So again, you're gonna have to switch over to your invest account. So on your invest account, you've made 3,000 profit. So again, you're smashing it, you're crushing the markets. That's what we like to see. Now with this, you have a capital gains allowance, and that is 12,300 every year. So because you've made 3,000, again, you don't pay tax on this. Now let's say you made 13,000 in your invest account, then you would have to pay tax on £700 after you've taken away your capital gains allowance of £12,300. Now, one thing for you to note is if you're registered for self-assessment already, you are going to have to report those profits that you've made within your invest account. So do bear that in mind. I'm going to leave a link down below for a tax video that I did. At the end of that video, broke down the full tax for UK. So do check that out. So as always, thanks for tuning in today. Do hit that like button for me. It really helps the channel out. And if you're new, hit that subscribe button, join the family, and check out the link down below to the Patreon, where you'll get access to the Discord, where I spend a large portion of my day talking to the community and answering questions. Guys, I'm excited because just in about 10 days time, we are kicking off our first monthly challenge over at the Patreon, chance to win $200. So should be a good one. So as always, check into the channel each and every day. Stock market is rapidly moving, so you never miss a beat. I'll catch you guys on the next one.